Hey everyone, welcome back to Corporate Decoder. Today, Carlyle Credit Income Fund C.C.I.F just filed an 8K revealing their latest net asset value update, and there is one key number that really catches the eye. Quick note, this is not financial advice, just our take on public filings for educational purposes. While the report itself is brief, the net asset value per share gives us a snapshot of the fund's underlying worth, and it is crucial for investors to understand. Alright, so the big news from Carlyle Credit Income Fund, or CCIF, is this recent filing on the 12th of June 2026. They've put out an update on their net asset value, or NAV, which basically tells us what the fund's own assets are worth, minus any liabilities. Think of it as the true value of each share based on what the fund actually owns. And the key figure here is that as of May 31st, 2026, the unaudited net asset value per common share was $3.54. Now this is a snapshot right before this filing. It's important to remember this is unaudited, meaning it has not been fully checked by external auditors yet, but it gives us a very current look at the fund's health. Now let's put this into some context. The Carlyle Credit Income Fund, CCIF, is involved in financial services and asset management. We've seen recent news about their earnings call presentations back in May and discussions around their preferred shares, CCID missing earnings estimates. This NAV update is another piece of that puzzle, showing us the value of the actual assets they manage. The current price for CCIF has been floating around $25.21 recently, with a 52-week range between $24.87 and $25.53. This is a significant difference from the reported NAV of $3.54 per share. This gap between the trading price and the NAV is something investors always watch closely. It can sometimes suggest the market is valuing the fund differently than its underlying assets. For example, if a fund consistently trades at a significant discount to its NAV, it might signal a lack of investor confidence or other underlying issues. Conversely, a premium to NAV can indicate strong investor demand or expectations of future growth. In this specific case, the reported NAV is dramatically lower than the current stock price, which is a very unusual situation and warrants further investigation into what might be causing this discrepancy. Often, such a large difference can be due to things like preferred stock or other complex capital structures that influence the common share NAV calculation versus the market price. Looking at the filing, we see references to common stock members and preferred stock members. In simple terms, common stock represents ownership in the company, while preferred stock is another type of ownership with different rights, often getting paid dividends before common stockholders. The NAV calculation takes into account all these different types of equity. Carlyle Credit Income Fund also has preferred shares, CCID, which have also been in the news recently for missing earnings estimates. This suggests that the fund, as a whole, might be facing some headwinds. The mention of non-redeemable preferred stock is also noteworthy. This means certain preferred shares cannot be bought back by the company at the holder's request. This can impact how the fund's capital structure is managed over time. It's important for investors to understand that NAV is a crucial metric for closed-end funds like Carlyle Credit Income Fund. It represents the underlying value of the investments held by the fund. When the price of the fund's shares on the stock market differs significantly from its NAV, it can create opportunities or signal risks. In this case, the reported NAV of $3.54 per share is vastly different from the current trading price, around $25.21. This kind of discrepancy is highly unusual and could point to a number of factors, such as complex financial instruments within the fund, significant leverage, or perhaps market sentiment that is not reflecting the reported asset value. Without more detailed financial statements attached to this specific filing, it's hard to pinpoint the exact reason. But it's a major red flag that would make any prudent investor pause and dig deeper. Given this information, the most compelling aspect is the massive gap between the reported NAV and the current market price. This is not a typical trading discount or premium, it is orders of magnitude different. If this NAV figure is accurate and reflects the complete picture of the fund's assets available to common shareholders, then the market is valuing CCF at roughly 7 times its underlying asset value. Historically, such a huge divergence often points to severe underlying problems, significant leverage that amplifies risk, or a misunderstanding of the fund's complex capital structure by the market. What I am actually looking for is a more detailed breakdown of the fund's assets and liabilities to understand how this NAV was calculated, especially in relation to the market price. This filing is just a snapshot, and a much deeper dive into their financial statements would be needed to fully grasp the situation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord for more.